Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Sorry, I forgot to schedule this stream. So, yeah, it's okay though. Hey, we've got retail sales today here in 6 months and 6 minutes, and this is going to be a pretty big number. But I got a couple of things on my mind here because I'm just noticing that my DOMs and everything from the last session did not save. So that's okay. Hey, let's go to the charts first. So yesterday in the S&P 500, we had a bender of a move. So there was a pretty ugly action on the beginning. China in particular, not looking so hot. And then, after they bottomed out around 9 o'clock or so, and then it was just up and up and up and up. And this very much had the gamma squeeze kind of look to it. It's just like a completely directional move. It pushes really hard at the end. This looks like people using options to try and push the S&P 500. Now, the issue is that we have a retail sales number coming out that is most likely going to be bad. And if it's worse than the market expects and the market decides to sell off and we break through these levels, you've got somebody with a ton of gamma on that is going to have to start hedging it the other way. So this could turn very ugly very quickly. I'm not saying that it's going to. I'm just saying we should be aware because that really changes the risks for us, risks and rewards and everything. Now, the treasuries, on the other hand, kind of a little bit all over the place. But interestingly enough, when the E-mini was moving down, we got this, okay? And they did come back, but not as much, and it was much slower. And then here in the overnight, when China gets scary, they go up again. So the treasuries very much have a propensity to move up when there are risk moves going on, but not move down when the risk on comes back. So that may just be because of the supply-demand dynamics in the interest rate complex, but it's a little concerning. Like, under normal circumstances, me seeing that would be, I would be thinking very bearish, okay? Oil also struggling a little bit because of China, right? Gold and silver. Now, gold has recovered its drop from this huge thing, and they're getting back into the 1800 level, okay? That might be good. Given that the interest rates are so low, I really feel that gold should be much, much higher. Okay. But there's like this whole question about like, is the interest rate like even sustainable? Because, let's say that the retail sales is okay. And then the jobs number next month is okay. And then they're going to taper, right? And the interest rates are going to come like way back. So that's kind of the issue there. And copper continues to just, that's a little scary. Today's move was a little scary there in copper. Okay. So again, China growth concerns seem to be the dominant factor overnight. But we'll see, because again, it's like, once Europe closes, then the Americans just buy it up. Okay. So the number that we're looking for, retail sales month over month, negative spot 3, core retail sales month over month, spot 2. Those are the numbers that they're looking at. Okay. Now, if I come over here into my market, okay. So there has not really been a whole lot of volume in our treasury complex, but we are getting the volume. It looks like everything's fine over there. Let us try opening some DOMs again here. Where's my 2-year? There's 3510. I know you're in here somewhere. Huh. Hold on a second. I'm going to restart Jigsaw. Because it's definitely there on our watch list, right? Now, what's going to have to happen is this thing right here. I think it's going to have to go. Maybe we'll move it over here or something. I don't know. I don't know what to do with it. I don't want to give away these. I love these little things, but I'm not really using this chart. So it's okay. I'm not looking to play the retail sales. Normally I would be, but the risks involved here and everything, I'm not very confident that I would get orders where I want. So oh look, now they open back up. Well, that's very curious. None of them seem to be loading correctly, but that's okay. Oh, there we go. All right. Okay. So rates are moving down here. I haven't heard the number yet, though. Well, that's a little fishy. Oh, that's really bad. -1 spot 1 versus expected negative spot 2. Okay, so it is bad. The treasuries seem to be taking it in stride, though, kind of suggesting that they already priced that in. Hmm. I really think in that instance that the market expected the number to be worse. So when I look at these DOMs, I feel like I'm wasting a lot of space. Like, do I really need the alert columns, for instance? Sturgis Bike Rally announces they will hold their rally next year on Martha's Vineyard to avoid any media criticism. Oh, hilarious. Okay, now the treasury moving back down. So let's see if we can come into this number and see anything curious about it. Because that ain't... Oh, it's highly unusual. And the E-mini, again, kind of reacting weird. Forex Factory is not working very, very well for me. That's where it would normally, it's not loading up. It's just Forex Factory, right? Let's try like CNBC. Yeah, it's just Forex Factory is not not so good. Here's the link. Okay. Here we go. Here's the numbers. Oh, hold on. Yeah, there we go. Okay, so the dollar is moving up pretty hard. That might be part of why the treasuries are behaving the way that they are. Have they gotten the macros up yet? Yeah, it's all working fine. At least it appears to be working fine. I am not getting updates over there really. Even though look at the treasuries move down. Huh. Now Spot Gamma is retweeting Stephanie Kramerman saying a massive dark pool activity is coming in on SPY. Get ready for a big move. Something weird is going. Look at that treasury there. Okay, big offer now at 13.5. The E-mini didn't move that much, but the treasury complex moved a lot. The initial move, they pulled down a little bit before the news, and then on the news, they did move up as you would expect, but then afterwards, it was just like a dump. How much volume? Yeah, across the complex, they sold significantly. So I cannot seem to sort out. Well, I just can't, for the life of me, think of why it would do that. This is an incredibly odd move. Is that just because of the dollar? You still can't get it on yours in NinjaTrader? So, have you restarted NinjaTrader today? Yeah, when I came back, usually before I go and eat breakfast, I will go and create the scheduled stream, and I just forgot to do it today. But we're okay. So if you haven't restarted NinjaTrader today, restart NinjaTrader, because when it starts up, what it's going to do is it's going to go to their database for instrument settings, and it will update the instrument settings. Or you could update them yourself. Why is the point value 10? That's wrong. So hold up. So I'm with a sim contract here. If I go into this one and I buy that, that's wrong. That's wrong, NinjaTrader. Oh my gosh. I'm gonna go email them. I'm pretty sure. Well, a lot. So I'm like, I'm looking here and I'm like, well, that's wrong. But I'm second guessing myself. Mm-hmm. They updated it and they got it wrong. I'm pretty sure I see where they made the mistake because it's $10 per DVO1, but DVO1 is not a full point, at least not with the way that NinjaTrader handles it. So it needs to be updated to 1,000. So I'm gonna come in here and modify them on mine. Now, I think for that to be picked up by Jigsaw, I need to restart. So, first of all, I'm going to save this workspace. Okay, so the E-mini did move up. This is all kind of fishy. It's another one of those, if interest rates stay low forever, then we can keep buying the S&P 500 forever. That's kind of what I think it's suggesting. Jackson Hole, very important tapering. No, I would not say that the retail sales was as expected. It's a little bit more complicated than that, right? So the expectation was negative spot 2 when we got negative 1 spot 2. So it was worse than expected. But that was the analyst expectation. The market was very clearly expecting differently. And, Zero Hedge, they've been posting for the last few retail sales some data from a couple of analysts, like credit card data and so forth, that is been pretty indicative of what is going to happen in the retail sales. So even though it was lower than the analyst's expectation, it wasn't necessarily lower than the trader expectation. And in fact, when it came out, and my reading, at least, although I think in this case it's a little fuzzy, so I'm going to just say it's a theory. But my theory is that in the Treasury complex, when that number came in, that it was in line with expectation. But perhaps that ends up being like a, buy the rumor, sell the news sort of thing, right? It was expected, the move happened, they took their profits because now the interest rates are rising. Now, we're also seeing a pretty big move in the dollar. So I think that that's a really important part of it. That might be why the treasuries have moved down as hard as they have, is because the dollar is strengthening. But I don't know. It's just the strongest correlation that I see at the moment, so. Okay, so we're going to test here again. No, this one seems to be messed up. Symbol. Yeah, it's still. Oh, there it is, right there. 2 year. Okay. Okay, so we're gonna test this one. If I buy in here, yeah, they're worth $1. Okay. Oh, Bitcoin. I haven't even checked the Bitcoins. They've been on a decent run lately, but it's still pretty. I don't know. Like, the thing with Bitcoin that I think is so funny is you get a move, and it will be in line with the correlations that people say Bitcoin should follow when it moves up. But then when it should move down, nothing happens. Gold up. I don't know if the gold is a big deal or not, because I do think that at this exact moment, with the interest rates down as much as they are over the past week, gold should be higher. But there was also that huge sell last Monday, remember? So right now we're still kind of like in a gap fill. So I don't know if the move up in gold matters or not. Still very speculative, yeah, on Bitcoin. There needs to be a threat on the Afghanistan withdrawal. People who support withdrawal but don't like how it's done have no better option. And it's this attitude that leads to forever war. Yeah. You want to talk about the Afghanistan war? Man, no, we got to figure out what is the deal with the 2-year, huh? That may just be doing that because there's literally been no volume in it and it needs an update. It's so depressing. Well, I think there are some things that you can learn pertinent to day trading. I mean, what goes on in Afghanistan is unlikely to have an effect on the markets, at least in the short term. It could in the long term because it's definitely a political thing and it's going to be an issue next election. But in the short term, what can you learn from it? And here's what I would say. Pay attention to systems. Pay attention to systems. So you're going to have a tendency to want to focus on individual cases and individual people. But especially when it comes to government, you are going to be better able to predict what will actually happen if you look at the larger system. Now, with presidents, when a president comes in, really what's happening is you're voting for somebody that's going to come in and is going to install a system. That's part of what the campaigning is about. When you campaign, you create alliances and you have campaign managers and people like that eventually end up taking positions in your cabinet, right? That president is going to come in and is going to create a system of people around them, right? Well, what has happened here is that Joe Biden, you need to understand, or I don't think that everybody understands, that Joe Biden has really been one of the most anti-foreign intervention stay in a nation for a long time senator that we've had. So like this guy was kind of talking smack when the fall of Saigon happened. He wanted them to pull out, and he was actually kind of happy that Saigon fell, and even like voted against giving aid to the people that were fleeing South Vietnam. That was Joe Biden, right? So what happened was he went in and he installed a system around himself that was not very favorable to the Afghans. So when they decided to withdraw, and understand, we only had like 2,500 troops there in Afghanistan. Like there was not a lot. But when they pulled out all of the logistics, right? So the system basically crumbled underneath of the Afghanistan military. And so they all said, oh, well, if they don't care, if they think that we're a lost cause, then it's not worth me risking my life. And so they just gave up. That's what happened. Now, in terms of politics, I will say this, that he gave a speech yesterday. Joe Biden gave a speech yesterday. It was, in my opinion, it was an absolutely terrible speech. I think some people will say, well, he's doing the best that he can given the circumstances, but we really needed to pull out of Afghanistan. I tell you, in the long run, with the political football that we Americans didn't want to be in Afghanistan is not going to matter as much, probably. But these sorts of things that he was saying, like, why should we, how do you put it? Why should we be investing people in manpower when the Afghanis are not willing to defend themselves, is what he was saying. So he was basically blaming it on the Afghans. I don't think that that's going to play well in the long run, because what's going to happen is all of those refugees over in Afghanistan are going to come over and they're going to say, well, you pulled the rug out from underneath of us. They're going to say, you know, our lives and our families and everything that we had built was at stake, and you're blaming us for this terrible thing that happened when you pulled out. Right? I don't think it's going to play well in the long run. So where this is going to matter to markets in the long run is that Democrats are not going to be able to get as much done. In fact, if this was like the UK and we had no confidence votes, there would be a no confidence vote against Joe Biden right now. You're making me like Joe Biden? Well, okay, wasn't it Donald Trump who set a date? Kind of, sort of, no. So here's the thing, is that Donald Trump set a date that was basically like right after he was going to win the presidency. Okay. And there was all sorts of contingencies and things like that. Okay. So if they had gone through with Donald Trump's withdrawal date, things would have been very, very different. I can't say if they would have been better or worse. Here's the thing, is that from a, here again, on a political perspective, that's not a very effective argument, because whether or not Donald Trump would have done the same thing and presided over a similar disaster is irrelevant, because he didn't do that. He wasn't the one that was president, right? He set a date. Joe Biden came in, moved the date 8 months away. He could have just canceled it. He could have just said, we're going to stay there. He didn't make that decision. And then he moved it up 8 months. And there was all of that time during that 8 months where they could have made decisions about changing how we withdraw, not doing an all at once withdrawal on one day, maybe coming in and saying, hey, you know what, people, that they're like back in May, they were taking places, right? Maybe we shouldn't pull out. Maybe that should affect our plans. Maybe we should have some changes in the contingency plans, right? So what Donald Trump did or might have done ends up being irrelevant. And so that is really, I think, a distraction kind of argument that's not playing very well among the electorate, I don't think. Uzi says Republicans by and large didn't want to leave. They disagreed with Trump on it. I don't know if that's true by and large, because I do think that the majority of Americans wanted to be out. But I also saw a survey that was saying, you know, if ISIS was taking, if us leaving would leave the country to ISIS, I think a small majority favored staying. But I certainly meant in that way. I mean, I certainly fit in that category. I wasn't so sure that leaving Afghanistan was really the right thing. But at the same time, I didn't really know a lot about the issue. You know, this is one of those cases where it's like really easy to, you know, pontificate after the fact, right? I didn't know that pulling out would pull the entire Afghanistan logistic structure out from underneath of them. Right? In retrospect, the decision to pull out looks really, really dumb. And this is where I think that it hurts Joe Biden the most, because in retrospect, there were poor decisions made. And what did he say yesterday? I stand by my decision. What he should have said was, like, we screwed up and it's my fault. Right. If he had done that, like, that's what happened with the Bay of Pigs, and JFK owned it. Right. Joe Biden not doing this, I think that this is where it's really not playing well with the public, because I'm like, not even Democrats are trying to defend this. Wow. Kathy Wood says Michael the Big Short Burry doesn't understand innovation space after he bets hard against the ARK Fund. Yeah, okay, so can I talk about this one too? Or do you guys want to, as you have other comments about, I'll wait a little bit to see if you have other comments. I think this is more important though. It's one and more example of religious extremism. Well, okay, so one of the things is that I think that the Democrat perspective on nation building in particular, and I think that this really goes to like what they did during the Obama years, is I think very twisted because of their opinion on religion, because their whole idea is, oh, okay, if we just liberalize their country, then in a generation they will forget about God and they'll do what we want them to do. And it just doesn't work that way. And I think that is really, the Democrats have a very myopic view of religion. They don't really understand the role that religion tends to play in people's lives and the fulfillment that people tend to derive from religious experience, because they don't experience it themselves, and they don't understand this concept that like religion is kind of ingrained into us, and that's why people that are religious on average tend to be happier and things like that. And so because of that, they develop expectations about what can and cannot happen that are incredibly unrealistic. So they have this idea in the head that we're just going to become more secular, and if we push that in the popular culture, then the kids will all become non-religious, and then religion will fade away. That's what liberals believe. And I'm telling you, it's not going to work out that way. Like, yeah, the kids of this generation have largely given up on organized religion. But what you're going to find is that in maybe 10 or 20 years, there will probably be a religious revival. Because, again, there's this gaping hole in people's hearts where religion used to be that is not being fulfilled. And they're trying to fill it with things like politics, but it doesn't really work. And this has happened in American history many, many times before, and then you get a revival afterwards. And that's probably what's going to happen, is the kids are going to come along, like their kids' kids are going to come along, and when it's not a big deal anymore, and they're going to come across religion and they're going to find fulfillment from it, and it's going to change. Lack of education in rural areas. It's it's going to tend to happen over and over. Ace says he wants to take a short here. I'm still kind of waiting here. So I would really like to take advantage of this move in the interest rate complex through the micros. Like, I'm really tempted to just come in here and buy the micros, but since I don't really understand why the treasuries are pushing down as aggressively as they are, although I guess we should say that they're back to yesterday's levels, right? So I don't know if a short in this location would even make sense. Most people who leave, no, I don't think that that's true. I think that they want to say that they're very happy, but the surveys, every survey that I've seen suggests that religious people tend to be more happier and feel more fulfilled. Yeah, the Overton window. Yeah, I think you're right. They people tend to swing mildly from one extreme to the other. So you're going to see my generation became extremely non-religious. I think that what you'll probably see is our kids who will probably become more religious. That's what continues to happen in history. And it just goes back to this thing that, like, this idea that you will just get rid of religion through like cultural repression of religion is ridiculous. And that's kind of what they think is going to happen when we're like rebuilding nation states. And that's not what happened at all, was it? That would be confirmation bias, Keller. So here's the thing: when we're trying to make some sort of a conclusion about a societal trend, as soon as you start to go into anecdotal experiences, you're likely to come to false conclusions, right? You're going to look for the things that confirm what you already think. And that's not going to be effective in predicting what's actually going to happen. So that's why I look at the arguments that I'm making. This is what happens historically, and this is what statistics show, right? Those are going to be more likely to lead you to a correct prediction. You got pretty lucky there on 2 points because it's bouncing again. Ooh, this E-mini Open is going to be interesting to me because the retail sales were bad. Does that mean that the next jobs number is going to be bad? Well, it seems to me like that economic activity has declined, but that does not necessarily mean that it is affecting employment. In fact, I think, I don't think that this reduction in spending has anything to do with the employment situation at all. Like, people are nervous, but I don't think that people are getting laid off. So the September jobs number would still be good. What would the Federal Reserve taper? Because when they taper, that's where I really get concerned about the S&P 500 repricing, right? One day the atheist preachers are going to convert you to their religion. You just got to open your mind. Was the reason that any atheists are depressed is usually just because of the hate they get from their religious family and friends for not leaving because of the state of being atheist itself. Well, I'm sure that people experience that, but anybody that goes against the dominant belief in their area or the dominant culture is going to feel that to some degree. And one of the things that I think is really funny, frankly, about the atheist experience is that they seem to think that experience is like somehow unique to them, when the reality is that almost everybody in their life at some point will experience that thing where they feel ostracized or they don't feel a part of a group, and then they go out and they find a group of people that accept them. That's an experience that almost everybody experiences to some degree. So, but here again, the problem is that there is certainly something in people where they seek the fulfillment that religion tends to give. And if they don't believe in God, they try and fill it in elsewhere. You say it's wrong, but go and look at movies, okay? How many movies are there that have that kind of experience? That's like half of movies. Okay. The movie Avatar, really, really great example. You go and you join this group of people, and all of a sudden you feel like you have found your people in the place that you belong, and you go and you become part of them people and go against the humans. Right? This is like one of the key archetypal stories. And why is that? Because everybody experiences that to some degree. Especially in our society. Honestly, how many do you think that there's a ton of people sitting out there saying, in high school, I felt so accepted by the popular culture in my high school. just everything about where I live and the people that are around me, they're all just so perfect, and everything was so perfect, and I felt so accepted and popular and whatever. No kid thinks that. No teenager thinks that. The teenage years is always marked by some sort of dissatisfaction about the culture around them, and seeking to find an alternative culture where they feel that they fit in. This is everybody feels this. It's just that some people, that experience that they feel through it is with atheism. But it doesn't change the fact that humans generally, well, not generally, I mean, almost without exception, seek to find purpose, greater purpose in their lives, and that they find the way that you find that is through family and community and religion. And if you don't have a family, you're stuck in your house all day long, and you're an atheist, where are you going to find that? Become a religious atheist, I suppose. It's like that South Park. You've seen that South Park episode where there's like two schools of atheism, and they're arguing over something that Cartman said or something like that. They're killing themselves over that, and they're like, no, that's like not even close to like what happened. Yeah. Okay, now I want to talk about this other thing, though. Can I talk about this other thing now before I forget about it? So Kathy Woods. So one of the big pieces of news out of the 13F filings was that Michael Burry has increased his shorts against the ARC Innovation Fund. Okay, so he was like big time short, and it looks like he is only more short. Now, Kathy Woods this morning says that Michael Burry doesn't understand the innovation space after he bets against the ARC Fund. And she called him out on social media. Oh, you know what? We should, you know what? I don't follow her on Twitter, but I probably should. Kathy Wood, we'll go find her. Let's see what she was saying. To his credit, Michael Burry made a great call based on fundamentals and recognized the calamity brewing in the housing mortgage market. I do not believe that he understands the fundamentals that are creating explosive growth and investment opportunities in the innovation space. Well, I really think that a lot of what she says is junk. Okay, so that was the extent. So first of all, CNBC is kind of making what she set out to be a little bit bigger than it really was. But here's the thing that I see with Kathy Woods. I don't think that it's fundamentals at all. I think that it's 100% that she's popular. I think that probably the vast majority of the things that she is involved in the innovation space are complete junk that are going to disappear. But so why is it moving up? Because people are investing in her fund. She has, like, look at how much effort they spend on social media, right? What has happened is they understand that orders move markets. And if you know what the future orders are going to be, or even better, you can affect what the future orders are going to be through persuasion, then you can make money. And that's the way that she makes her money. Whereas Michael Burry is much more like the trader, what I think a trader should be. He keeps his mouth shut. He doesn't say a whole lot about his investments. Even when he was still on Twitter, he didn't say a whole lot about why he was doing what he was doing. Because if you really have the greatest trade, why do you need to tell anybody else? You don't want to tell anybody else for fear that they'll try and squeeze you out of your position. But eventually that thing will take off, and then everybody will know it. Kathy Wood is a financial profiter or a scammer? Well, she got lucky on Tesla is really what it comes down to. Afghanistan was destroyed by the US, actually? Well, I think that it's a much more complicated issue than that, right? When it comes to, so again, look at systems, guys. Systems are going to have the most likelihood of predicting outcomes. What is the system like in Afghanistan? Do you know? Did you see? Let me see if I can find this story. Did I read it on Zero Hedge? Oh, I forgot about this story that said that the Chinese continued to dump treasuries. Can you imagine? We're up so high, and the whole time they're selling. When treasuries fall, who's going to be there to hold it? Here we go. Okay, what is the system like in Afghanistan, guys? It was widely reported Sunday that as the Taliban was at the gates of Kabul, President Ashraf Ghani was quick to flee the country towards neighboring Tajikistan. This, no doubt, signaled national troops on the ground that there was little point in putting up much resistance given their commander-in-chief had hightailed it out at the first sign of enemies closing in, while not even so much as addressing the Afghan people. According to a Russian embassy statement on Monday, the circumstances of Ghani's departure are even worse, with the embassy in Kabul saying Ghani has fled the country with 4 cars and a helicopter full of cash and had to leave some money behind as it would not all fit in. 4 cars were full of money. They tried to stuff another part of the money into a helicopter, but not all of it fit, and some of the money was left lying on the tarmac, he added. The embassy cited witnesses who held the bizarre scene on the airport runway. Something that frequently happens when the United States gets involved in these places is that a lot of money comes in, and because the money does not get distributed amongst the people, or which is to say that the people do not really have much of a stake in what goes on, the money just all goes to the people at the top. And that creates grift and corruption. And because of the way that the United States goes about nation building by just dumping tons of money into the area, they basically have a greater likelihood of creating an unreliable government in that area. That's what I think happens. That's my theory. But regardless of my theory, what was the system like in Afghanistan? It was corrupt. It was corrupt, and the Afghanistan people had no reason to believe that this Ghani guy had their interests in mind any more than the Taliban does, even though I think that there's a lot of people there that really don't want the Taliban, right? I'm sorry, this idea that it was religion that ruined it, no. It was grift and corruption that was at the every level of the Afghani government. It was corrupt. That couldn't be more vague. Well, I mean, come on, guys. This guy is running away with a helicopter full of cash. Did he care about the Afghani people? Hell no. If I was president, they'd have to kill me. Huh? If I was president, you want me to leave? You're going to have to kill me. I would put up every fight, and I would say it is in the interest of the Afghan people that these people not be put into power, and I'm willing to die over it. That's what I would do. They'd have to kill me. But what does this guy do? He leaves the first sign of any trouble, and he's trying to take as much money with him as he can. That's another thing. You're fleeing the country for your life, you really need the money. You don't need pallets full of cash, I tell you that much. I mean, like, especially if you were doing the right thing and everything, the governments of the world should be helping you and all of that. Why do you need to take all of this cash with you? It's corruption. So here you have a government that's corrupt, and then you pull the rug out from underneath of them. What do you think's going to happen? Yeah, falls apart. Trump wanted the Taliban to be at Camp David on September 11th. Yeah. But I don't know if you missed that thing earlier, but I was pointing out that there's a propensity among, Democrats right now that the biggest, what is the word that you use? They're trying to put a Band-Aid over things, right? They're trying to respond to this, and the biggest response that they seem to have is that Donald Trump first initiated the withdrawal, and that does not end up being a favorable argument to them, because Joe Biden could have reversed any of that when he came in, and he could have changed trajectory. He could have changed the way that they were playing about it at any time, but they didn't. They don't eat bacon. Who cares, dude? That's not why the country didn't collapse because of bacon. Okay, not every Muslim country in the world is a failed state, let's say. I mean, I would say that they all have things that we don't like, but there are some countries, Islamic countries in the world, that have quite a lot of success and wealth and power. So yeah, Keller was saying they do not eat bacon because of corruption. They do it because of religious mandates. There's an argument against that. The reason that Afghanistan fell was because of corruption. I'm just saying that they eat bacon has nothing to do with why the country fell. Let me back up from like a higher perspective. We're going to have a very meta discussion here, right? Okay. Here's how I think that argument should go, right? You have a thesis, and then you'll present evidence that supports that thesis. And then when they argue against your thesis, then you find evidence directly pertinent to that particular piece of evidence that disproves it, right? This is really like the way that the scientific method goes. So for instance, thesis, price reflects all available information. Okay. Interesting theory. It's a good theory, but it is a theory. Can we find evidence that supports it? Well, over a very, very long time horizon, markets do tend to follow fundamentals on a very, very high time horizon. Okay. But on short high time horizons, there's a significant amount of volatility. That's the argument against it, right? So what did people do? We went and we did studies over the course of 100 years or so to measure how much excess volatility there is in the markets and try to identify where that volatility comes from. Yeah? And that's how you go down through the process. Not everybody wants the West's democracy. Yeah, I think you're right, but I still say so. Here's the thing: is why did South Korea and what was the other one that was really successful? Well, I mean, I don't know if Taiwan is really a very good example, but let's just go with that one. Why did South Korea work so well when Vietnam and Afghanistan not? Why did South Korea work out, but Afghanistan and Vietnam didn't work out? Was it because people were too religious in South Vietnam? I don't know. What do you mean by work out? Well, because South Korea is considered a success, right? I mean, granted, we still have troops there. Kind of makes you wonder, how come nobody's ever arguing to remove troops from South Korea? Well, probably because South Korea has been successful, right? They've made a lot of money. They have a bustling economy over there. EO says it's all about ideology. But I contend that systems are greater predictors of how events, especially on the international stage, will play out. Yeah, you could say that religion is part of the system, but largely speaking, when you looked at South Vietnam and Afghanistan, the United States continually had poor partners to work with. They had leaders in the country that were corrupt, didn't really care for their people, made poor decisions, etc., etc., etc. Whereas in South Korea, we had effective systems that put the people first and made good decisions and so forth, right? I'm suggesting that maybe the way that we go about nation building creates that. Well, them treasuries came all the way up and nobody took any trades in the 10-year. You see that? There was like 200 volume back in here and that was it. I gotta wonder, though, here in the Treasury. I don't know, man. You want to have more success in situations like that, you've got to create a better system for doing it. And the answer is not make everybody atheists. I'm sorry. It's not going to do it. I'm sorry, but frankly, that argument is one that is born out of your own desires or like when we bring that up, you want to talk about it, right? You guys, not you. I'm not talking about any one of you individually, but like collectively as a group, you want to talk about it, right? But it really is not really a major player in this situation. And again, the reason I'm harping on it, because I don't really care to have that argument, the reason I'm harping on it is because if you look at systems, you're going to have a greater chance of finding an edge in the market, okay? If you can understand and dissect human systems and identify their strengths and weaknesses, you're going to be more likely to be able to find edges in the markets, because that's what you're doing. You're looking at a system and you're identifying where the system tends to be right and wrong and taking advantage of it. So there's been a little bit of backwash here in the treasuries, so maybe they're coming back. I'm still not so hot about trying to take a trade with it. 2s and 10s spread definitely moved, but Oh, and I am getting some data on the 2-year now as well. If we kind of go back, maybe I should set these DOMs to like never reset. I think I'm going to do that. I'm going to tell them no auto center. Oh, okay. The Taliban is going to hold their first news conference today. So let's go from here. The Taliban has official Twitter accounts, do they? Yeah, but Trump still being banned is pretty crazy. They're still having these cases. Like it's really crazy to me, all this stuff about the Capitol riots, because they're basically holding these people political prisoners over what basically amounts to trespassing. Taliban check marks. Do they have blue checks? That would make it even better. Oh, by the way, we sent that email to them. Let's see here. Wrong. Sorry, you're wrong. These contracts, he says, these contracts are using a basis point as a single point. Here is an excerpt. Yeah, no. A basis point is 0.01. He's wrong. I'm funny. It's a funny. Well, the treasuries have come back there pretty hard, huh? Is that selling on the open? Yep. Okay, so question: how are we gonna get this? How are we gonna fit this in there, huh? Really? When Biden negative hashtags started to trend, Twitter made it so people without accounts couldn't view subtweets or trending. Really? I tell you what, this was always a problem with Twitter, and I think it's kind of funny now how people are like only now realizing that there was a problem with making Twitter such a huge platform. It was always a leftist cesspool. Like they really designed it to be that way too. Like when Twitter was first created, they didn't think we're going to become the dominant communication platform on the internet for breaking news. I don't think that they looked at it that way. They were just trying to create their like own little community, and their ideal little community was a leftist one. It's the same thing with Reddit. Getting new tweets every millisecond? I don't get that many tweets. Wow. I'm having a hard time here because I'm like I don't think I'm necessarily anything special. And yet, with these micro futures, it really seems like the brokers were not on the ball. And I'm pointing out theirs that they're getting. And now they're arguing with me, and they're wrong. There's not a doubt in my mind that they're wrong. Because it's $1 per tick. Okay, so even though there was a pretty good sell on the open, I'm not sure if that's significant, like that will really tell us much about what's going on. Like the volume deltas aren't really very big. Man, I need help here, man. Okay, so here's my, well, I have them all on Sim still. Okay, I'll just show you. So here's what I've got. So I think that we need to keep the market analyzer up somewhere. And we need to be able to see the cumulative delta here. This one, economic releases, I don't feel like we really use. Because I have financial juice. These, I guess we can't really use. These, this one, these are so hard because I don't know where to put them. They need to be somewhere. They probably should be hidden here, though. So I suppose I can fit this right in there. And this Bitcoin chart is going to have to come over here. Yeah, I'm going to have to put it over here, BTC. $30-minute. 180-day. And then here I'll add another data series to be Ethereum. Oops. Whew, it's a little hot in this room. It's getting hot in here. And what's this one? That's also Bitcoin, I think. Wait, what are the data series that I have on this? Oh, is it just the spread between them? Oh, it's the cumulative deltas. That's what that is. Okay. So we'll add that. Okay, so then that allows me to close that. Market analyzer, though. Where could I put it? It's so big. We could move it over here. But then we can't see the dollar. Plus, I just don't tend to look up there. I tend to look over here. Suppose I could put it over here in this other screen. Let's try that for a bit. Seeing oil take off. Oh my. Oil's taking off. It looks like the ES is getting a lot of activity too. And usually a high amount of activity. How come I don't see CL up on this list? Do I not have it on there? Oh no, it's right there. Well, it's taking off, but I guess the amount of volume is not significant yet. Do you think that a manual exit is better than a trail or a fixed target? The trails are killing me, dude. Well, every algorithm that I've ever back tested, the trailing stops and targets made the algorithm worse. So I think the reason that is because the size of the random oscillations in the markets have a greater predictive value about where your stops are going to get hit than any kind of signal that you think you have is, right? Which means that if you have a stop that is closer than 16 ticks away, it's a lot more likely to get hit if you're than a target that's 24 ticks away. How about a manual exit? Well, sure. I mean, like the thing is that in the long run, with what it sounds like you're trying to do, you should really think about it more as managing risk. So if we're moving up, and you see something that you know has a propensity to make the index move, do a certain thing, you might want to take it off. So I think the best example is if I'm trading down in the treasury and I find an area of low resting liquidity, that is a lot of orders traded there, but now nobody is really that interested in putting liquidity at that location anymore. What the tendency of that is that it tends to suck price in, like price doesn't move. So that's not really something that you can necessarily make money off of, right? Knowing that the index is going to stop moving, how do you make money from that? But if you're already in a position, then that tells you a lot, right? Well, I'm not really going to get anything for being in the market for another 30 minutes. I might as well take it off, especially if I was planning on taking it off in the next 15 minutes anyways, right? So you can come in and you can have signals that tell you that it's likely to continue and things that tell you that it's likely to stop, and you can try and manage it based off of that. And in theory, that should improve your stats. But like a trailing stop basically just means that you'll get stopped out more. That's what that tends to mean. All in, all out with set stops and targets, and back testing seems to work the best. But I have gone from time to time, like one time, I had an algorithm and I was like, okay, except for if this one particular thing happens, I know it's really bad, then you want to get out. And then that improved it because it saved some profits. So that's the best that I've been able to find on that. Now don't need that anymore. I'm just reading Twitter here. No matter how far I put it, it gets hit to the tick and then moves? Okay. Well, so this is where I would say be paranoid. Right? So if the market is just coming after you, it has the ability and it is just coming after you, how should that affect your trading? Just not trade? Well, I mean, that's one thought, and it's not a bad one. Okay, but I'm assuming that you really want to trade. Then what do you do? And I would say, well, you've got to only trade in a situation when the market, even if the market wanted to come after you, it wouldn't be able to, right? That's because HFTs and people like myself know where your stops are. I mean, maybe. The research that I've done suggests that the market doesn't actually know where your stops are, certainly not in futures, but rather that the behavior of the market overall just has a propensity to stop out retail traders' typical strategies. The way that we tend to do it makes it so that you're just likely to get hit no matter what. Or rather, the way that it changes makes it so that on average your win rates can be 45% once you include the spread. I don't think that it has to know where your stop is for it to do that. So if you look at it, what'll happen is like it'll say, oh, okay, like the average range here is 16 ticks. So what I've got to do is I've got to move it down 17 ticks first, and then I can move up. You can bet they've studied where people enter and where people will step out. What the problem with looking at it from most retailers all have the same strategies. First of all, I don't think that that's true. But second of all, when you're going to look at like the aggregate of retail traders, it's just going to be noise, right? When you look at that big of a data set, it's just like with volume profile. You're just going to see this distribution of noise. Doesn't really tell you anything. But since, okay, so like think about it like this, okay? When you're taking a trade, you're trading against somebody else. So say you're the retail trader, you're what we would consider the noise trader. And then there's somebody else out here that is buying contracts because they know that at the top of the hour, the S&P 500 is going to move to 4460 exactly. I'm not saying it's going to, I'm just saying for the sake of argument, it's going to move to 4460 exactly at this time, right? Then what's going to happen is he is going to absorb as many contracts as he can up here, and there's like an optimal number that he can get to that's going to move us to that location and maximizes his profit and without burdening him. Because if he takes too many, then it's going to come back the other way, right? So you take that trade, anybody that takes it short, obviously they're going to lose out, and at some point they're going to buy up here and they're going to become part of that other volume that moves it up to that point, right? But what if you go long? Well, if you go long, then what you're doing is you're competing with that informed trader for that volume to be able to move up, right? He can't get enough contracts for it to be worth it for him on this trade. So basically all of the buys, there's no buys. So what has to happen? Price has to move down a little bit so that he can get more fills in his buys, right? So that's what I'm saying. Like it doesn't have to actually know. It happens on its own. Nah, I don't think that they use the same TA. Like the thing is like when you look at technical analysis, like probably the 10-minute moving average is pretty widely followed. But almost everything else, it's like the way the retail traders end up using it is so random. I don't think that you can really, I don't know if there's really that much information in that kind of way. Like where reading the retail traders order flow is going to come from is seeing that all of the retail traders are starting to pile into X stock or whatever and adjusting your market making algorithms appropriately. I would really like to take a trade, but I'm just not seeing. Okay. Well, that was something. I don't know if you heard that. Oh, by the way, let's come back over here so you can see me. Hi. Hi. You give good insights. Thank you. Well, that's really like the Kyle model is where that comes from, but I don't know. Like again, I would just come back to, let's just assume that they do know. How do you deal with that? Well, you should only trade when it's a really, really definitely going to go to that spot. So this kind of bet that like, well, it's probably more likely to go to my target than my stop based on this long period of data that I have, and hopefully that continues to hold. this sort of a thing, or like they tend to do this, that ends up becoming a poor reason to trade if the market maker can just move the market against you to your stop and stop you out first, right? That trade doesn't make any sense. Okay. But if the way that my move is we just had a bad sales number and people are taking profits or whatever the deal is. I guess in this case, you'd have to say people are taking profits, and that's why the 10-year treasury moved down. Okay. Like if you knew that that's what was going to happen, you could take that pretty confidently, right? Because the market maker would have to be absolutely crazy to want to go and stop you out in that situation when 20,000 contracts are about to come off, right? So that's how you've got to think. You've got to think, what if I was on the floor and I was the most widely followed trader on the floor? Like, how would my trading differ if Goldman Sachs literally was paying somebody to follow me around and keep track of my position? Because that's what used to happen on the floor, right? They'd find those popular locals and they would pay people to keep track of what they were doing, right? Those people were still successful, from my understanding, right? So how would your trading change if that was you? Tim Tebow has been released by the Jaguars, ending his attempt at a comeback as a tight end. Well, there you go. There's him, and he's getting another little stop run the lower there. You trade according to how they want the market to move. Well, you would have to trade according to order flows that you know are coming, right? So the underlying theory behind the way that I trade is that orders move price. The order has a significant impact on price, and if you can predict future flows, then you can predict future price. Trying to look at price itself to figure out where things are going to go is kind of useless, but there are ways of predicting flows, and then you can make an accurate prediction, right? So if I knew that people had built up a large position long in the treasuries because of the retail sales number, and I think that you could have made that determination. At the time I was kind of thinking like the part of why I didn't want to trade it, because I had all these dreams last night about coming in and just buying the micros and it just taking off because that number was so bad. But because it was already up, I kind of knew that it was priced in, right? Now, I didn't predict that there was going to be all of this decline. I'm still not 100% sure if that's why it happened. But you could make that trade. You could predict that order flow potentially, right? Trading along with order flow is the most profitable way to trade. Yeah, sure. Just don't fall into the trap of running technical analysis on order flow, right? Can you sell me a seminar on how to write script? Well, I have a few tutorials videos on the channel about how to write in C# for NinjaTrader, and I really feel that when you combine what I have in those videos with the NinjaTrader's manual, that you have everything that you need to be able to write anything. Be able to write just about anything up until you get into really, really complicated things. But one of the things, so I could probably make a lot of money selling programming services, right? The reason I don't is because every time that somebody has come to me with an idea and wanted to program it, it was pretty trivial. It was something that I feel like you would be wasting your money to buy, because it's just a really simple setup and it doesn't actually work. Right? So y'all can write these yourself. It's really not as hard as you think it is. You just got to watch those like 5 videos or so. Can you mix volume profile with order flow? Well, so what are we saying when we say order flow? I gave you $20 for some code that was out of love, though. I don't remember what that was, but I would have done it for free. When I'm talking about order flow, so think about flows. This is kind of an interesting thing that I don't think you've heard before. Okay. Where's my pen? Yeah. Okay. So one of the things that's interesting about flows. Okay, one flow that you get. Oops, that's not what I wanted. I wanted the current trades. Yeah, there we go. Okay. One of the flows that we get is market orders that come in, right? Those are flows. Market orders coming in. That's a flow. Market buys, that's a flow. Market sells. But there's also another flow, which is limit orders being placed. And let's see here. We're getting the top of the hour numbers, the housing market index. It looks like index was 75 versus 80. And business inventory is in line at spot 8 versus spot 8. Next piece of news that we got is Feds Powell and Kashkari speaking later in the day. Much later, by the way. Can Ninja calculate acceleration and speed? Sure it can. I'll pay you 15, that wouldn't be enough. But, a day. Actually, if you paid me that much a day, that would be enough. But what would I be doing that would be worth that much? Oh, the last digit. That was actually a good one, though. Yeah. No, that was a legit. I mean, I would still say that. So I think that you could program that yourself, but because you're like working with somebody else's code, and I do have a little bit of finesse in how I do things so that they're easier to work with. And if you don't understand that code, you might not know what to do. But what I did wasn't actually super complicated. Numeric differentiation. Well, you can, like, calculating speed and acceleration of price movement is not difficult at all, right? It's just a derivative of price. You're just saying how much has price changed over how much has time changed, and that's speed, and then acceleration is the first derivative of that. Yeah. Anyways, okay, so you got flow, market sells, market buys, but another flow that you have is limit orders adding, and another flow that you have is limit orders being removed. Huh? So this is where people don't really think about it, because one of the things that people will say is, okay, but how do you deal with canceling orders? Well, canceling orders is one of those flows that you've got to watch, right? You just think of it as another flow that you watch. So I know that at each individual price in here, a significant body of the orders that are there are just for placeholders. And therefore, if price were to tick down at 09, there is a certain number of contracts that I can almost guarantee are going to remove at 08.5. Right? Similarly, I with an iceberg, if that does pull, I know that there's going to be a certain number of orders that are going to come in and stack anyways. So, if this pulled to like 2,000, or even if it pulled to 500, I would expect that anywhere from 1,500 to 2,000 contracts would still trade here in order to clear that price, right? And then that's what I should expect based on the current order flows. And then if it's different, okay, so did you see that? 1,000 pulled right there at 08.5. More than 1,000 pulled at 08.5, right? How did I do that? Was that like a really prescient prediction where I just have a really good feel for the markets? And I'm just watching the flow. Like, that's what happens every tick. They tick down, there's going to be a certain number of orders that are going to come in. And then here in this particular case, you can see the orders coming in. I know that they're going to stack. Those orders don't mean anything. That's just them saving their place in line, right? But those are flows. Those are order flows. And then we can think of that as flows as like, okay, money will come out of the E-mini. It will market sell into the E-mini, and then it will come into the 10-year treasury and buy. Why? Because there's risk off sentiment, for instance, right? Those are flows. And so you can take it from the most basic level here on the DOM, and then you can start applying it to global levels. I'm going to see money come out of one country and into another country, and then these are the assets that they're going to go into. And I want to track where that money is going. And that, to me, is order flow. It's following the flow of orders. Now, be careful. There's a tendency to want to apply technical analysis to order flow. To say, well, cumulative delta is moving up, so it's going to continue moving up. Well, this doesn't always work. To the question about, can you mix volume profile with order flow? So looking at first data set. Well, that's what we mean by order flow. So now what do we mean by volume profile? Well, volume profile, as most people talk about it, is another form of technical analysis, right? The way that you would look at volume profile is there's a distribution here, and yesterday the distribution was down here, and therefore the probability is that we're going to move from here down to here, and that it does that X% of the time. That's technical analysis, right? Technical analysis is trying to use past price information to predict future price information. This may actually have a very high probability of happening, but because it's not associated with a risk-reward probability, you don't actually really have a good trade. And what you're going to find more often is that when this one does happen, you don't make as much as you lose when it doesn't happen. And or that the stop that you need to have in order to catch this is large enough that the risk isn't worth it. So you're using technical analysis, but that doesn't mean that the volume profile is not useful, because what the volume profile tells us most of the time, well, and this is kind of where I also criticize volume profile. In this particular case, why this price right here? What happened at 09? Well, so what's so special about 09? I mean, like, if I look back at the chart, we haven't spent all that much time at 09. Okay. There was, for some reason, two traders that were willing to exchange a lot of contracts there at 09. And what tends to happen is, because all of the people that wanted to trade at 09 have already done so, that nobody wants to put liquidity at these prices. People want to buy down here. People that want to sell up here. And so it creates a funnel that price gets stuck in, right? That is something that we can show happens with math. Like there's math that when you get into Walrusian auctions and so forth is what you'd want to search for. And they talk about how this happens. Right. So that's something that it tells you. But then, like, if we come back over here, let's see if it will match for today. Maybe. I don't know if that one, the 10-year, is a good example. Okay. So yesterday in the E-mini, the volume point of control was 44.37. Why did that occur? Well, it looks that there was a significant buy the dip reaction there. Okay. So, question. Since so much trade happened there, why should price move back to that location again? Because people will say there's like an X% chance of it touching that. But here's the thing, is like there's an average chance, like if we start here, right, there's an average amount that it's going to move, right? So then we come back over here. Well, in this particular case, it's within that amount of range, you know, like there's a certain chance that it's going to go from here to here, you know? So the reason why that percentage ends up being high is just because they're what the average range of the day is and how much they overlap, right? So we want to read this huge significance into this particular price. It may or may not actually be a thing. Well, one thing that I would say in this particular instance is that we know that we can assume this is an order flow. We know because of how this moved when we were watching it. This was an order flow. Where did this order flow come from? Well, I don't think it can be can explained by just the buying and selling in indexes, for instance. If we come over here and we look at yesterday, I'm gonna need to go back further. Okay. Look at the cumulative delta. During most of this move up, it was actually pretty flat. So it didn't come from the futures. The way that it's such a smooth move and everything else like that, I'm going to say this move right here is options. Okay. So now that we know that this is options, now all of a sudden we've got something. Okay. Because we know that there's going to be gamma created by this. So it may not be here. In fact, let's come and look. That TradingView changed their freaking page. Oops. Okay. So I can look at gamma. We started today here. First deviation is 44.21. If we subscribe to spot gamma, we could probably get a more accurate level, but I'm going to bet you that it's somewhere around there. So now we got this thing, right? We know that if we touch 44.21, there's probably going to be some buying demand in here. But then if they exhaust that buying demand, now all of a sudden the gamma flips. We're likely to get an order flow of continued selling because of forced mechanical activity from options hedging, right? So now what I've done is I've used what I've seen to set up a scenario where I may be able to predict a future order flow. That's order flow. It's not technical analysis, right? Because technical analysis would be, well, price was here and then price moved here and then price moved here. So that means that the probability is that price is going to do X. What I'm saying is using order flow to confirm it. Well, I mean, I think that the real setup should be, I think that an order flow of X for this reason is going to come in, right? So there's lots of different things that you could use. For instance, changing beliefs about future fundamentals and order flows could create order flows, right? And I can predict those. If a hurricane happens, then insurance companies have to sell their stocks to pay for the damage. That's an order flow that we can potentially predict. Yeah. And I don't really think about the technicals of it at all. Because at that point, why do the technicals matter? You know what I mean? Whereas I used to think of it as like, oh, okay, well, like here's a volume profile. And then when I come over here and I see the order flow coming in at a particular location, then I can try and take it, right? Well, that sort of a trade could work potentially. If there really is something about that level that changes the order flows. But what I think you're going to find over time is that those levels that you think matter don't matter as often as you think. And so that kind of becomes problematic from that perspective. So it's much better to have like a fundamental reason why order flow should do a particular thing. Okay, so by the way, it looks like from the last time that I reset things that there was a bit of steepening, I would say. Yeah, I mean, the bigger thing is so another thing to keep in mind is if there is a pattern, when price does X thing, it is likely to mean this B thing. Okay, when A happens, B is likely to result. The market is going to see that and they're going to trade it, and that's going to eliminate it from the market, right? So, just like the market tends to behave this way when X thing happens is a bad basis for a trade, essentially. So anytime that I see myself saying that sort of a thing, my thought should be, oh, I'm trying to perform technical analysis. I should stop, right? But if I can give a reason for why that's going to happen, right? Like when markets pass critical gamma levels, they tend to fall because of forced mechanical selling, right? Now I have like an actual reason behind the prediction that's not just based off of the price moving. How do market makers make money? For example, if you think ES is going up and you're right, so the market makers sell you a contract, they have to go short. How are markets? Okay, so the way that market makers make money is this. I'm gonna, or rather, think of it this way: if I'm a market maker and there's a move that goes against me, how do I make money from that? Okay, so what would be the best situation here? Okay, let's say that I'm market making in the treasury. Okay, and some market makers don't really have a choice. You as a retail trader, you can say, well, I think it's going down, so I only want to sell, right? And hope that I get some fills on this side, right? But this guy might not have a choice. But what might also happen is he might just have all of these orders up here and they move against him, okay? Now, if I see a certain amount of order flow, like if I see so many market sell orders come in, that all of a sudden I'm like, oh no, I don't want that. Then, okay. Is it going to tick down? No, maybe not. Okay, so maybe I leave it. If it had ticked down, I was gonna cancel that order, right? Because I'm saying, okay, there's enough order flow that the possibility of adverse excursion against me is too high, so I want to take my orders off. Okay. But then eventually you're going to get filled, right? So let's just say that we got filled on the one contract. So now we're long from 08 and it goes down to 07.5. In order for me to make a profit, I need to have it hit me at 08.5. So I need to sell at 08.5, right? Maybe that doesn't happen because it's a trend. It keeps going. So what am I going to do with the trend? Well, I'm going to keep taking contracts down in here. And then anytime that it ticks up, I'm going to be taking some profits off of those orders that I took on down here. And as I continue to do that, I will average my position out until I have a little bit of profit, right? And then hopefully I can work it out so much that, you know, I have a certain position on and my break even on that position is like way up here, right? So it'd have to like move way super far in order for me to start losing money, right? So essentially, the most simple way of saying it would be they average down. They're allowed to take on so much risk and they just average into it as it goes against them, right? And then they've got to be sneaky about how they put their offers on there so that their offers actually get filled. And when you do that, when you market make in that way, there are models that show that essentially you should make the spread. Like mathematically, you will make the spread per trade. So after all is said and done, when you take the amount of money that you made and divide it by the number of contracts that you used to do it, you'll come out at 1 tick per contract. Okay. But where the problem comes in is if you have a really extreme adverse excursion against you. So a big key in a strategy like that is determining at what point you need to cancel your orders and let it move. Right? This is why when we're watching the order flow and I see it ticked up on 500, bid increases, offer pulls, it ticks up on 500 again. Bid stacks, offer pulls. That's why those are so good, because what the order flow is essentially telling you is that the market maker sees so much risk of adverse excursion against him that he's continually pulling his orders. Right? So we're predicting an order flow in particular, limit offers or limit bids canceling because of the amount of market orders that are coming in. They adjust the spread constantly. Yeah, well, in futures, it doesn't really help because they can't really, what he could do is he could say, okay, because of the excursion against me, I'm going to bid 7 and I'm going to offer 10 or something like that. But it's kind of hard in treasuries because, well, in any future, because the spread, the natural spread is always 1 tick. But you can see it over here. You notice today in the 10-year treasury that there's only a 1 tick spread now, which is kind of interesting. If I could put in an order, I'm a little scared to do it. I just don't see a reason to be taking a trade in here. I mean, I could try selling it, but it looks to me like they've already found balance. So, and I really, when the treasury is sold like that, I mean, I think I can explain it, but I really did not expect that to happen. So what do you think about the type of trading when people average down on the dip stop loss free? Isn't it risky? It's definitely risky. Part of what part of how a market maker makes money is taking on the risk of adverse excursion, right? To provide liquidity. But if you're trading for a firm, the amount of money that you have available to risk is huge, right? Like when they say it, like how much can you lose before like it's a problem? Well, first of all, you're going to have profits just from the regular action. The regular action is going to develop profits for you. And so when it comes down, you're just losing the profits that you already made from the day. No big deal, right? But then if they do move down, yeah, you could be losing millions of dollars, but like the amount of leverage that you have and everything, it's not really a significant portion of the money that you have available. So it doesn't matter, right? Except for when the recession comes and the markets are just absolutely crashing and these algorithms take the adverse excursion against them, and then you get all these firms going out of business all at the same time, right? But you're right. In a strategy like that, realize the way that they get an edge is they can take on a lot of risk. And they have to have really good risk management techniques to be able to deal with the fat tail, essentially, on that risk. Which means, by the way, that as you as a retail trader, doubling down, probably not the best way to do it for a retail trader, because adding leverage, most retail traders, you just don't have a big enough account to do that, right? So instead, what retail traders will do, the first way that they'll take on risk instead is they'll have a larger stop. Okay. Now in the E-mini, I'm not so sure that's a good idea, right? Because you think you have a really wide stop, and then like the range of the E-mini is so wide that like that stop is just going to get hit, you know? It kind of becomes a problem. But you can actually get away with it for quite some time, and we see traders that do that, okay? But how do you deal with the fat tail of it? Like the day where you like lose over and over and over again on those? I don't know, because I've seen a lot of people trade in that way, and you know, like they'll do really well for a period of time, and they'll attract a lot of interest, and then it blows up on them, right? So then we kind of move over to the next thing, which is like, I'm seeing favorable action. I'll take the timed risk. I'll take 2 contracts, but only for a very short period of time, and only taking a very small profit. And I can take that tiny risk over and over and over again and build the profit up, and then make my subsequent bets against that profit that I made. That makes a bit more sense, right? Then when you start managing it in that way, you got something that is a lot less likely to blow your account, because the risk that you're taking is only for a very, very short period of time. Right? I'm interested in trading leap options. So I've never touched those, man. I've never touched leaps. To me, the idea of making a market prediction that far off is a little crazy. The only time that I would be willing to do something like that is if we just had a really bad recession, and I'm really confident that we're at the bottom of it. Well, E-mini seems to be doing okay now. What do you do when they set a trap and stop you out? Do you re-enter? Well, to me, if I get stopped out, I suppose it depends on the situation, right? So if I think based on the flows that we're about to see a reversal, then I might be willing to take it 3 or 4 times after getting stopped out and try and get it. And then if it doesn't happen, I just give up, right? But like when it's like normal market action, well, that's where you can really get yourself in trouble, right? Because here again, it's like, why should it actually move? What makes you think that this order flow is going to come in behind you and move price to where you want it to? Do you really actually have a solid reason that's really actually has a good probability of playing out? Because if there's not like a fundamental reason for people to do that, then how do you know that that's going to happen? Right? So then you think it's going to do something. You take it a bunch of times and then you hit your stop for the day, or you start martingaling it, you know. I suppose I'm okay with martingaling it as long as you have like a strict limits on it, and you really actually have like an edge. Like, that's the thing. What's the new ladders? Those are the micro treasuries. What do you think? I'm a little torn still on how I've changed my format. I don't know. I suppose that sitting here, my analysis of the E-mini hasn't really changed. I still have this other chart here for my algorithm because I'm not entirely sure that so can you see here, my level 2, because I didn't have the chart up, my level 2 didn't update. I'm going to come back and look at that code because I'm pretty sure that I have the runs while inactive or whatever is still checked. Oh, is suspended while inactive true? Should be fuzzy. So that's that one. And then this one, same thing. No, it was suspended while inactive, false. But it was really the level 2 one that I was having problems with. Let me make sure that that's actually the indicator that J uses. J2. And it was... Yeah, it was. So that's interesting. But it's like the market depth updates don't seem to work. I'll come over here. NinjaTrader 8. On market depth. This method is not called on historical data. No, that doesn't help. Trying to figure out why, if the chart is not up in front, that it doesn't seem like market depth does not get called. Well, I still have this other chart in behind here. You can see it in the back. I don't know what to do with it, because it's not supposed to run in the back, but I suppose what I could do is I could modify my workspace over here. Yes, I think that's what I will do. I'll do it after stream because I don't think you guys are interested in watching me resize windows, but I should make this so that this is a 2x4 stack,
right? So they'll be more like that. I think that I'll still be able to see enough. I don't really look at the charts that much anyways, right? But then I could have these for algos or whatever. And I could put the market analyzer over there. Even if not trading these, I would probably replace those ladders to Dixie 60 or 18. You know, I don't really find having the ladder open on the Forex to be that useful. Another thing is, like, I have this one, like I have the 6J here, for instance. I don't really notice that the NQ and YM. You know, I'm not sure I noticed that, but those aren't really using up a whole lot of space. The Dixie is definitely something that I need to have, but the problem is that my eyes are over here on the right side of the screen and not the left side of the screen, and so I tend to miss that anyways, which sucks. But I'm not sure. Like, I tell you what, the dollar, really important thing to watch when you're trading, but sorting out what the correlations tend to be in the dollar, I do not have that matrix filled out. We probably need to start saving more information, trying to sort out where the dollar should or shouldn't go. Because I frequently find these situations where it's like, okay, if it's a risk off move, then I see the dollar move up, sure. But then the treasuries move down and it isn't making sense, you know? So I think it's especially when the dollar and the treasuries don't line up is where it seems to be weird. So, yeah. But I want to have all four of these out. Like, not only do I want to have all four out, but I want to be able to place orders on all four. Because I want to take yield trades. I want to see... you know, I want to take like a flattener, for instance. I want to sell the 10 and buy the 2. And see it flatten. Which is not... Oh, but it did steepen earlier, so I don't know. So one of the issues is when I come over here... I'll minimize these so that it's not so messy. That is the spread. I'm pretty sure that that's accurate. But as of late, what the spreads have been showing me are not... seem wrong. It's kind of weird. Here's the spread. So on this one, it says that 2 and 10 steepened. 2 and 10 steepened. Well, I suppose that's what we should expect to happen. But then here, 5 and 30, they did not steepen. Right? Which means, I suppose, that the 2-year sold more. Oh, that doesn't make sense at all. But that's because there wasn't any volume there. Yeah. I would need a chart of the bid-ask history to really see, but it seems to me that the 2-year came down more than the 10-year did, but we'll see. Probably there's not enough trade data for me to sort out what my spread trades should be. On the other hand, they haven't really been going very much, so what I could do is I could buy here, sell here. Wait, is that what I'm expecting to have happen? I can buy here and sell here, and then 2 contracts, and then just do the market making here and take 2 ticks over and over and over and over again. Because the markets are so correlated, it's helpful to see near you that make cause reaction. Well, yeah, if I see 2 things pivot at the same time,
Even if I'm seeing two things move in the same direction pretty strongly at the same time, that's definitely like, okay, how are these flows related? We definitely want to sort those things out. Hopefully, though, I just see those on the DOMs. I mean, I think that the DOM is the best way to see that sort of a thing. It's just I can't see that with the dollar index, unfortunately. I wish I could have a price ladder with the dollar index. That'd be great. See, I see somebody here on Twitter making a case, just like we were saying earlier. The probability of retesting the previous day's settlement price during the next day, pretty high. Yeah, it is, but it's because of the range of the day. And to say, okay, it's at this price now, I think it's going to go to the settlement price, and I'm going to put this kind of a stop, risk reward on it. That's when you get some issues. But we could test that very easily. Yada. I need to do, what I've been thinking about doing with the Yada is just putting like 10K in there for a while and see what happens. See if I win a Tesla, So see, in this instance, you can see like these all move down. So I would say that they're steepening. These all came down and the 2-year didn't. Well, you can see in the chart. Well, I'm not going to keep my eye over here on these charts. I don't think that charts are very good at indicating to you what's happening right now. What I would really like to see is this ticks and this ticks at the same time, that the ticks themselves appear to be correlated. How long does the money have to stay in the well, you could go and put $25 in there right now and get a ticket and potentially win a Tesla. You're not very likely with only one ticket, but yeah. That's as soon as you put. I think that if you put it in today, that it won't give you. Well, I'm not sure how it works. I don't think that the changes get reflected until Sunday. Like I think Sunday, that's when they issue new tickets, and if you invest after that, you don't get tickets until the Sunday. But I could be wrong about that. We may have 10,000 Americans stuck in Kabul. How do they not know? Oh my gosh. China's really trying to play politics with the Afghanistan thing. It's a little infuriating, but hey, that's China. Sloppy entries we know can be substantial. Remember those traders looking to make 3 ticks a day in CB with 20 lots? No, actually, I don't remember that. I'm not sure what you're talking about. You make 3 ticks a day and with a ZB, that would be amazing. If you were really that consistent. Panic as Afghani crashes after central bank chief flees, says no more dollars left. We'll read that later. Home builder confidence crashes to 13-month lows. Yeah, I have a friend that does some stuff in construction, and I was like, oh, business must be pretty good right now then, huh? But it seemed like it was just kind of like meh. Kiwi crushed. Oh, that's another one. Can you believe having one coronavirus case in your country and shutting down the whole country for 3 days? And I'm like, what does shutting it down for 3 days accomplish? Like, anybody that has it already has it and will still spread it after 3 days. Like, it would need to be like 10 days for it to even make any sense. Dow's trying to make it a comeback. It looks like the NASDAQ is the one that's moving, man. Look at that. Do we have a title for Tuesday? Yes. Yes, we do. Retail sales crash. Retail sales crash. Can't they have a two? Yeah, that's why I was like, it doesn't make any sense at all. I tell you, New Zealand and Australia, you guys are nuts. I think they're nuts what they've been doing. Let's see here. It was. So the reading that we just got was for July, right? Well, I guess I don't need to say. I was going to say, you know, like a market loves it, but it actually doesn't. It's actually unclear. The market seems a little concerned today. We'll see. I mean, like yesterday, I would have said about the same thing about this time, but maybe the gamma buying comes in again and we move back up. Did people finally buy enough? Yeah. I'm really a little. So where was it? Where did I read this story? I don't remember now anymore, so I could read it to you. But there was another story about how the members of the Federal Reserve Board continue to talk that a taper is coming and that they're in favor of a taper. Like the last one was a Fed speaker last night saying that, you know, if the next jobs number is good, that he would support starting to taper that month. But he made another comment that I thought was interesting, and which was that because the supply is so constrained and everything else, that asset purchases probably don't help that much anyways. Right? Like basically saying that we don't have to buy treasuries because the interest rates are staying low by themselves. Which I think is probably correct. Essentially, I think that they're kind of starting to come to this like, oh, maybe what we're doing isn't actually helping, and so I would rather taper now rather than later. I think that that's why they're kind of starting to talk that way. But again, if retail sales were so bad, what does that mean for the employment numbers? Like, I get that people might be pessimistic and are not doing as much economic activity, and probably a lot of that was because that a lot of that economic activity was based on the stimulus. But, you know, what's the next jobs number going to be? And does that change the probability of a taper? I don't know, because the E-mini, they came out, the Treasury, the initial move should be up, but then it was like it was always already priced in and they've sold down, but it's sold down so hard. Sold down so hard. I saw one of the most liberal economists say, we are really capitalists if the Fed props up the market. Well, I think that when you have all of these people on unemployment assistance, and the whole treasury market is practically a farce, that it's a legitimate question. But at the same time, I'm not convinced that what we've got going on right now is going to be forever. You got to remember that we as humans tend to value more recent information more than it's really worth. So I think that you're probably going to see a regime where there's continued deflation, and that deflation is a strong thing, and that the Federal Reserve continues to have easy money policies, but not asset purchases, you know? Interest rates will be in play later this year, and on days notes are anemic, a 60 will give a play. Could do. I would certainly anticipate that the base case here is that interest rates are going to rise dramatically. Yeah, the base case is that interest rates are going to rise dramatically, and there's not going to be anything over here in the treasuries to buy it when it falls. And how far they can go and how much of a shock that is to the stock market, who knows? Well, the Federal Reserve won't raise interest rates, but can't do it without bankrupting the government. Well, I don't see how else it's going to play out. What you'll see is, a taper tantrum, and then the rates kind of back off, and that kind of slows it down. But in the interim, there'd probably be a lot of chaos. I'm not so concerned about the government's ability to fund itself so much as I am the stock market taking a 20% haircut because of interest rates, or like a 50% haircut because of interest rates. U.S. is an extra band, maybe. People have been telling me that for the last 10 years, though. I think that with the U.S. being the premier economy, that's the calculation is a little bit different on that one, right? But how do they pay the debt off? That's a big question. That's a big question that the politicians don't seem to have an answer for. It seems like that they've given up on trying to solve that one, in fact. Yeah. They're just like, we have a deficit and we're never going to pay it all back, and nobody cares. That seems to be their attitude. Deflation is the new norm, not inflation. Well, that's true, but the deflationary things are not necessarily because of the monetary policy or anything. A lot of it is just globalization, right? Now, I kind of wonder. I mean, so one thing here is that China used to own a lot of U.S. debt, and they have sold almost, it looks like they are going to almost completely reduce their withholdings or their holdings. And you know what? Given the current environment that interest rates are on, I think that what the Chinese sovereign wealth funds is doing is pretty freaking smart. Dump all your treasuries here because they're giving you the best prices that you're ever going to get for them. But what happens after they're gone? Japanese are going to buy it all? I don't know, man. That's when things start to get really... I have no clue. I can't game that one out. That's one where it probably will take some risks and get destroyed. Should be fun. Russia is also completely divisive. Yeah. I don't know if that alone is a big deal, but what is a big deal is like where China is kind of going right now. There was like after the trade war thing, there was like a change in China, man. And I'm not sure what it is that they're thinking, but it's concerning to me. Now, good news is that under the current strategic landscape, the United States really has China by the balls. I don't think that we realize. Okay, if the United States wanted to blockade China, it would be so easy, because all of the inlets to China have these huge island inlets, and all of those islands are don't like China. That's why China's got all of these problems everywhere, right? So if there was some sort of a war, like if there was a declared war against China, yeah, they'd be screwed so hard. But at the same time, China continues to be kind of like warmongering, like acting like they're raising tensions, and we're going to take over Taiwan, and all of these things that you say are red lines, we're going to cross them. Okay. I'm more concerned that Americans would think knifing China in the alley is the way to solve it. No. The United States almost certainly won't be the first to strike. China will do something that becomes enough of a concern that the president finally thinks that it's time to act on it. I really thought that maybe Hong Kong would be the thing, but China was just able to pull it off in a really sly way, and Donald Trump was just not up to the task and let them get away with it. So, recent actions, as I'm sure. Well, did you see the whole thing from China today trying to say, you see, Afghanistan proves that the United States is an unreliable ally? But I don't think that the story really bears out China's message, right? Because if anything, the story in Afghanistan is, we'll come in and we'll prop you up for 20 years despite your own best efforts at incompetence, and we'll still try and keep you up for 20 years. So if you're actually like a reliable partner, think about how far you can go with the United States. That's what I think you should be reading from it. As long as you're not a dingbat. So the decades of U.S. puppeteering in China wasn't a first strike? No, I don't think that that's really an accurate way of what things have been going on. It's really astounding to me how much control or influence China appears to have on social media. Man, when it becomes an issue on China, there really is like this army of people. All of a sudden, the conversations like are completely different. It's so dramatic that I think that everybody in the U.S. has to see it, which makes me wonder why they do it. But I guess a lot of the audience is for Chinese nationals and stuff like that. Still, it's like a lot of effort into it. No, China will definitely start it. No question on that one. The NBA takes March. Oh man, that made me so mad. When Blizzard did it, like a player made a comment about China and they banned him from the tournament from Blizzard. That made me so mad. I'm so mad at Blizzard. It makes Bobby Kotick ruined a great company. He really did. Good news is that most of the people that were really making things happen over there left and went and created their own game companies. And so I don't know how long it's going to take. It sure seems like there haven't been very many good games out lately. But at some point, those guys are going to release games, and I hope that they're really awesome. Well, there was a pretty decent amount of activity in the markets, especially in the 5-year. The 5-year really just got hammered. But I don't know. I don't know. We should get into this thing. Well, man. So one of the issues is that when we come over here and we do a chart, so if we do a chart of the 5YR, and let's do it by tick. One tick. And I need tick replay. Right. Okay. Like I don't even get a whole bar. I don't even get a whole bar. I do it with a line. It's better to do these with lines. Line on close. Apply. Okay. There's been 2 trades. There was one at 8 and there was one at 758. Right? Because the interest rates got reduced. But then it should have come back up, right? And then, okay, so what about if we do the 10-year? Oh, okay. Okay, it kind of moved. Kind of moved. Okay. Well, there's actually more yesterday than today. Rates got reduced, but then they came back and they're like, nobody traded it that way. But I would really like to be able to plot something that will just show me the yield curve and it'll show me like today versus yesterday and like you can reset it at a certain point or something like that. That would be cool, right? I don't know how many people realize the international community views you as the enemy. I don't think that the international community realizes how much America doesn't give a fuck what the international community thinks. It's not that we don't know that they don't like us. It's that we literally don't give a fuck. You know why? Because we don't have to give a fuck. Because we're the biggest, most powerful country. Why should I care what they think? If I'm doing what I think is right, who cares what they think about it? It is what it is. You like this, Seth? What do you mean, like making a yield curve chart, or are you talking about how the international community views this? Oh man, did you see that story? I gotta go, dude. There was this story about Black Ops site in China, and they're like, "But the U.S. did it too," and I was like, "Well, yeah, but that's pretty sucks. That pretty sucks." Oh my god. Well, okay. Anyways, hey guys, I gotta get going. See you tomorrow. Stay.